Kellogg CEO Steve Cahillane joins us now, fresh off of that earnings call. Steve, thank you so much for joining us. Very strong sales over the past quarter, especially over the past month. Tell us a little bit about what you saw from the consumer.
Good morning. Thanks, Sarah. Thanks for having me. First, I'd like to start by talking about what the most important priorities are for us, and that's how we can deliver in the marketplace. Keeping our people safe is and has been the number one priority. Getting food to the marketplace in the most efficient and effective way possible, allowing us to perform in the marketplace. And then finally, giving back to communities, which is incredibly important. And that's allowed us to keep our factories running really flat out around the world, 24 hours a day, 7 days a week, breaking production records each and every day. I couldn't be more proud of our supply chain team and what they've been able to do, what our suppliers have been able to do in getting us the raw materials, and what our customers have been able to do in terms of keeping their customers, consumers safe, operating in this incredibly difficult environment. Because what we've seen is companies like ours are really being sought out by consumers as obviously shelter at home. They look at brands they trust. They look at affordable foods that are convenient. And so we have seen an incredible rise in demand, but it all happens because our people are safe. They're able to operate. Our customers are leaning in with us, creating this environment that nobody could have predicted just a few short weeks ago.
Nobody could have predicted 45% growth in consumption for Eggo waffles in the month of March. Steve, the question, though, that investors have, and you must be trying to figure out, is how long lasting is this kind of bump and the return to growth for businesses like cereal or frozen foods, which were so weak before this crisis and now have some life. But as the economies start to reopen, we wonder if you can still continue to grow in those kind of categories.
Yeah, it's an important question and one that we're spending an awful lot of time studying. And so what we do know is people are obviously not only buying our products in much greater rates, but they're also consuming them. So it started with a real pantry load, but the food is being eaten, and it's being eaten in ways that are leading people to reappraise the category, to discover the category. And so if you start with ready-to-eat cereal, one of the interesting things that we're seeing is increased penetration across all demographics, across all cohorts. And we're also seeing consumption increase in different occasions. And so one of the number one occasions that cereal is actually growing in is cereal for dinner. And so it's growing at breakfast at double digits, but it's growing as a dinner replacement as well, and a snack. So we're seeing it growth across all occasions. Our strongest, most loved brands are growing the most. And so how much of this sticks, obviously, is an important question. But we're working very hard to not only make this an accident where people are eating more of our foods, but having a purposeful program where people will, stay with our brands as things get back to normal. Now, when they get back to normal and how quickly that happens, obviously it's going to be staged. Nobody really knows, but we can expect that people will be eating more meals at home for quite some period of time.
Is there any way to tell whether people are eating cereal, whether it's for breakfast or for dinner, because they want to or because they have to?
Well, most of our data suggests because they want to. Now, they're at home because they have to. So it's a bit of an intricate question. But when they're at home, they're eating cereal multiple times a day, and they're doing that because they want to. So they're home because they have to be, and they're eating cereal because they want to, and they're rediscovering the joy that they have in cereal, the appreciation for how convenient it is. Some of the things that we're picking up are how easy it is to clean up. And so people are making a lot more meals at home, and means they're doing a lot more dishes. They have time to do that. But they also look for things that are convenient, that require less cleanup. Another thing that we're picking up is it satisfies the desire of the entire household. So kids love it. Parents love it. It makes the whole family happy. And so, I know in my household, it's hard to find something that everybody likes. All my children like broccoli. I don't. But everybody loves cereal.
Although, Steve, I don't know, I don't want to speak for Sarah, but what she might have been getting at is over the longer term strain on household budgets There's been some data points out of restaurants where they're seeing stimulus checks now being used in the month of April. I guess, what does that mean for pricing over the medium term and the longevity of, say, premium products versus cheaper options?
Yeah, it's obviously, as I mentioned, watching the unemployment figures climb to the levels that they are it's just heartbreaking, right? And so, my personal thoughts and prayers go out to everybody who's going through these trying times. And we're studying as a company what happens during recessionary environments, which is obviously what we're in, when household budgets become very strained. And one of the things that people go to is what's economical, and cereal tends to be, and our snack business, our frozen food business, you mentioned Eggo, all tend to be very affordable at-home foods. And so one of the things we've learned in past recessions is companies and brands that hunker down and don't invest in their brands through brand marketing and innovation especially don't win. But if you continue to delight your customers and innovate despite tough environments and really focus on the affordable nature of your food offering, and ready-to-eat cereal is an incredibly affordable meal solution, it's a winning it's a winning hand. And so it's a terrible crisis that we're going through, but we're going to be there for our communities, and our foods are going to be there as very affordable solutions for all families in the United States and around the world.
So why did you reaffirm guidance? Why did you keep it the same despite 8% organic revenue growth?
Yeah, we're in an environment where it is just incredibly uncertain, as you all know. And we're one of the few companies that has actually affirmed guidance versus withdrawing guidance. And I understand why companies are withdrawing guidance. They're withdrawing guidance because the future is incredibly uncertain. And so we have affirmed guidance because the first half of the year, our sales are quite strong, and we're not sure how long that continues and at what rate it continues. We have a degree of confidence in our business, but we also know that the second half will not look like the first half, and we're deferring investments that we would have made in the first half of the year to the second half. So in the first half, we have very high sales, lower investments. In the second half, we may have lesser sales and higher investments. We also have emerging markets where we have significant businesses that are also uncertain. And so we think it's the prudent approach to affirm guidance, not do anything other than that, and make sure that we have the financial flexibility to do the things necessary to continue to build a stronger business, so that when this is all over, our business is stronger than it was when we went into the pandemic.
You just mentioned deferring some investments. Steve, how have plans changed? Marketing, for instance. How much are you pulling back on advertising, whereas you would have normally done? Potentially delayed any product announcements or new innovations? How have the plans changed?
Yeah, so it changed dramatically, obviously, for us and for everybody, really. One of the investments that's significantly gone up is our investment in new safety procedures, PPE equipment, bonuses for our frontline workers, benefits for our frontline workers. And so that was a significant investment in the first quarter. It will be a more significant investment in the second quarter. Our first quarter brand investments were actually up year over year because the pandemic hit so late. And we were, our underlying business was very strong. In fact, we would have had the best top line performance that we've had in a number of years, even before this, based on the investments that we've been making in our business. Now, the second quarter likely will be lesser because it's a supply market. We're supplying everything that we possibly can, and we're deferring some investment to the second half when we anticipate it will become more of a balance between supply and demand type of marketplace. And so the first half will be a first quarter that was normal up until really the last 2 weeks of March, a second quarter that will be dramatically different and really characterized by more supply-driven, less demand-driven, hence less commercial activities and commercial investment, and a second half which we aim to make a little bit more normal. But again, there's so much uncertainty in the marketplace that we feel like we should get some credit for at least affirming guidance and not withdrawing guidance. But that's in the context of how much uncertainty there is in the world today.
Well, I think you are getting credit. Your stock's up 3.5%. Steve, thanks for joining us.